Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, June the 27th, 2023. Our look has not actually changed, although get a little bit stronger evidence that we have a strong possibility that the minor wave 4 did complete at yesterday's lows. The market kind of held above those lows before beginning to launch higher pretty quickly after our opening today. In fact, from the opening, we launched higher all the way into the last hour, and then we began to just have a pullback. So let's take a look and see where we are, where we may be going, and what our choices are for actually the next couple of days. And so let's just get into this. I'm starting here on the S&P. I'm going to leave it on the 1 hour chart. So we can see that minor third wave still in place. And now I've added the labeling. So as I suspected, without any additional new lows, that I'm labeling it a double ABC. Some other Elliottians use the XYZ, which also is nothing more than just a double ABC. In Elliott terms, so I'm using it the way that I was taught. And so it's a double, so it's ABCX, ABC. And quite frankly, this could be 1, 2, we get a 3, we get a small 4, put in a 5, get that first 5 in, and that would be labeled as a minute wave 1 of minor wave 5. And then we'd be looking for an additional pullback. Now, here's the caveat. This right now is being left as 3 waves up, unless we can maybe pull in a little bit lower, but we rally back up and we get above the high, which was 44.25, I'm going to call it. So we got to get above 44.25 and onwards to complete that first 5, small 5 waves up. So right now, the alternate would be that it remains as 3 waves, and that it would stay there if we came back down and actually broke below 43.88. So it's not all that far. It's just really about 26 points from the close. So very possible. I got to take a look over. And right now we're being quoted lower. So it's looking like it will open down about 2 from where it closed, 2.25. So the alternate would be that we have another 3, it's another X wave, and we do another ABC going down. So that then we would take this out, because obviously that would not be the low of minor 4. And we would be looking for additional levels down below. And I believe we'd have them at 43.50, 43.32, 43.12. And then all the way down to likely 42.88, should that be the case. Now, where can't this market go to? It cannot cross all the way down here, 41.13. Actually, excuse me, 41.19 is the high for minor wave 1. So it does have room and still would fit a pattern. And fourth waves can be a triple ABC. It's just a combination thereof. And so we're not out of the woods just yet in terms of this building now versus putting an additional ABC and then starting to build. I pretty much, because of this structure and the way it's kind of built right here, it's not turning into, in my estimation, into a 5-wave structure down off of those highs at 44.94. So with that in mind, I would be looking for an additional, if this doesn't build into a 5 waves up, where I can label as 1 and give us some confirmation that the minor 4th wave is over, then we'll look for an additional ABC down. And obviously that would be expected to break 43.68. And let me just go back out for 1 second, just to review very quickly what the fibs would suggest. And I go back down and make one slight adjustment because I noticed that it's not all the way up at that high. That high was 44.94, actually 93.75. And so 93.75 will like to be exact. Now we get that back up there. And right now, 236 is where it sits. 382 is at 42.98. 42.88 is additional based on the excuse me, I got to get my words together, don't I? The intermediate C wave. So intermediate wave C. And if I can pull this out, I will show that to you. So we have intermediate wave C, and that's coming in here. So that one just below. The 618 is just above there. So I'm not looking for, normally you would think that a fourth wave should be contained within 0.382. And that brings us down to 42.98. And it's possible. ABC down, it's possible. Again, we have to wait and see. But that would be if we pull back and come back down and break below there, leaving three waves up, then we're looking. Okay, so moving averages, you can see they continued, they started to turn. We got the 20 breaking back above the 50. Let me just open that up so we can see it. Just getting back above the 50, the 4 and the 8 very nicely walked this whole rally up. So it was a day where I think I've described it in the trade room that when you have macro traders, those that are coming in because they have a reason economically or because it's the end of the quarter, second quarter ends on Friday, and it's also an expiration. So we got a lot of position squaring and window dressing, they used to call it. And so it's just a lot of differences and a lot of changes are being made to the portfolios on what they no longer want, what they want to add, what they want to bolster certain positions. So we get that buying and selling and produces things like this. But today, it was obvious as they were coming in and they were doing their buying, what they wanted to add to their portfolio, or not everybody, but a good deal of them. And so we get that macro where it actually just kind of, or macro, and also it gets labeled VWAP, because the VWAP, value weighted average price, gets calculated all day long every time, you know, the market moves up and down. So if you're a big macro trader and you have a lot to adjust or buy in, then you're going to be spreading that out over different periods during the day. As you can see, it went up for 4 hours, 5 hours actually. And so they did some buying here, and here, average it out according to VWAP, and that's where the customer gets their report. And it works if you're managing a larger portfolio. So in any case, that went on, and so it made it a little bit easier, at least on an hourly chart, to sit and hold and hold and hold. There was movement in between, but basically the general force behind this was just upward. It was an upward move. So it was a little bit easier to put the position down and let it sit, manage your risk if it started to come off too heavily, and just play it from the long side. So again, looking for a little bit, if it can hold. And again, these would provide that support. So first support we have at 44.11, 44.10, and then we have the 8 at 44.07. We have the 200 at 44.02. So basically, I'd be looking for it to hold above 4,400, even if it was going to pull back in a small 4 and then begin to rally again. We shall see. Over in the NASDAQ, it's kind of the same pattern, a little bit stronger on this upswing. But I have to be honest, this is kind of not real good looking. But it's kind of a funny, a little 5 up, I'm going to call it. Stalled, up and down, not very clean. But there you have it. So, but the market did eventually, right after that, nice sell-off, which happened right after, in the second half hour of trade. We saw the sellers come in and go bam and drive the market down to a new session low, a regular session low. And then it just took off and it didn't stop after that. Got itself back above 15,000, got itself back above 15,100. Closed just below 15,100. So it did a very nice rally. In fact, the market was up over 200 points into the close, with the cash market closing up 256, 257 points. So it was a clean day for the long side. And here as well, I am looking at this. Again, there is the top of what I'm counting as minor wave 3. That was on the June 16th high at 15,415. And then from there, ABC, X, ABC, a double. And there we have what I'm putting in as wave 4. Now, I'd have to tell you that this I probably could do 1, 2, and then 1, 2, 3, 4, 5, 3. And then we're going to get that. Or it's A, B, and a C wave up. So we still could consider it a 3-wave move and another X wave. So same as in the as in the S&P, we would consider that the two will go together if they start hitting the NASDAQ stocks, which helped the S&P hold its levels today. So again, not too bad. We're opening down about 4 and actually higher in the NASDAQ from where they closed it in that extra hour of trade that we get each afternoon. So I am still going to mark this as that low. Now, having done that, I will go back out. And the first thing I would add is, should that be the case? Oops, I got to go it this way. I want to put on that, if we're in minor 5, what's it going to look like? I just got to stick it there. I got to go down because it's just really hard to see. And so, not bad. I'm going to put it down. That low was 14,850, 853. Let's go edit this. 14,853. And let's just make sure that is exactly 50, 853.50. All right. So with that in mind, what we have coming back up, I just need to make my adjustments here because we don't have fibs. I mean, they exist, but these are the ones that are going to be important to the minor 5th wave, if indeed that's what's in force right now. So let's add those, and you can see, pulling it in, our first one actually takes us to the new high, and that works perfectly. So again, the relationships between a 5th wave and a 1st wave on a Fibonacci basis are the first one is that wave 5 would be equal to wave 1. That's therefore we call it equality. And that would come in at 16,129. That's breaking 16,000, which brings us to some very strong levels and very strong possibilities of an irregular. There's the marker. That's the all-time high, 16,767. That's the marker right there. And throwing it above that would put us into an irregular. And on that case, and that's, I'm just going to cover upside for right now. What we're going to be looking at, A, B, C, A. So I'm going to go from here. Yep, that's right. Here to here to here. And again, I'm going to clean this up very quickly so we can see where we have overlap, if possible. And then we're going to be looking at all of this. So these have all been overdone, so they're pretty much not in force anymore. The lower levels, they've already been exceeded. And we're going to put this to there and go like that. So what we have left is 100, just to show as a marker. That's at 14,000. And then here, 1.618 is 15,795. So again, we have the most common for 5 to 1 would be 100%, 16,129. Second would be 0.618. And that's going to come in at 15,642, we'll call it, 40 to 45 up in there. And then lastly, we have 2.618. We got 100% at 16,129, 1.618 at 16,917, 2.618 all the way up here, equaling 2.618 to the minor C, intermediate C wave. So those levels, yes, they can exist. So in fact, let me just go one more out. And for an irregular B wave, so that would suggest, I gotta go one more, actually, up to that weekly, and we put in just actually retracements. So that I'm going to line that all up just so that we can see it. I'm just reviewing it. I'm not saying that that's what's going to happen, but we need to have a little bit of where all of this kind of comes in. And 1.382 is the most common. 1.236 is right there. So we have a pretty strong cluster around 18,001 some in there. So coming up in all of this can really start, and it would be quite the blow off for the NASDAQ. Is it possible? Well, technically, yes, that's what we're showing you. Should we expect it? I'm not sure right now because it's going to need the catalyst, and who knows what that catalyst would be when we have a lot of like the market's running out of gas, the market's doing this, they're looking for some change. So, but it's there. And again, if I'm looking for some stronger downside, I believe that what the kickoff's going to be is a change that's going to shock the market, something that's going to come through and make the market go like, whoa, we got to stop doing this. We have to now react, and would drive the market lower. In that same vein, in that same note, we could get that to the upside where, we have a July meeting coming, and we have earnings season. We're dropping into earnings seasons. We got all this junk. If they don't start to react to the fact that the economy is showing signs of not necessarily improving, that inflation's still going strong, and so some analysts are talking about how in different sectors, all of this calamity around the economy and the bull market and all the other stuff should start to be reflected more in earnings, with earnings adjusted down. So we're going to see. We will see, to be honest with you. Right now, those are all the numbers for upside. And again, I cannot rule out that we got another little slide lower, which would take us down below 14,853. And again, it would be ABC. And I think we have enough support coming all the way that we're going to be down back looking at these levels. So again, it's giving back everything we've already done and sliding back. But right now, as you can see, we are coming in and we're going to sit right on the 4. Actually, it's the 5. I use all Fibonacci's. So my moving averages are 5 period, 8 period, 200 period, 55 period, 21. So they're all fibs. And so I would suspect that if we started to come off from here on just a little 4, it should find support right there. And again, right below it at 15,000, come on, 50,065. 60 to 65, right in there. So I'm going to leave it all right there because it's not looking all that bad. Even if we got an additional drop down, it still only upsets the very short-term apple cart. The longer term would need to see a whole lot more to the downside. In fact, it would have to come down and break 13,253 to negate and really start to put that was the high. And all of this needs to be readjusted yet again. So, but what is in its favor that isn't the case is this is still looking pretty corrective. ABC, X, ABC. If we get another X and another ABC, I don't see how you're going to start counting that as fives. Because this from there to there, that's a nice 3. Right? A, B, C. That's a 3. So that's where I'm going to leave it. Our next update will be on Wednesday, June the 28th. One last thing. Sorry, I meant to do that. Let's go take a look and see what we have coming out tomorrow. U.S. trade balance, retail inventories, wholesale inventories, and at 9:30. Those all come out at 8:30 a.m. Eastern. At 9:30 a.m., we got the Fed chair, Mr. Powell, speaking somewhere. And that could turn things all kinds of directions. So they'll be leaning on that one, and that's right at the opening. It's going to be fun. Hopefully we'll get enough moves and we'll get some good trades going. All right, next update will be on Wednesday, June the 28th.